Welcome back to the channel, everyone. I hope you're having a great start to your week because today we're diving into what has honestly been a very strange and interesting beginning to the week for Cardano ADA and the broader crypto market. And there are a lot of moving pieces right now that you need to understand if you're watching this space closely. So make sure you stick till the end because we're going to break everything down in a clear and simple way. And before we get started, here is a quick, this content is for educational and informational purposes only. It is not financial advice. Always do your own research before making any investment decisions. The crypto market is highly volatile and risky, and I am not responsible for any financial losses you may incur. Now, with that said, let's get into what's actually happening right now, because the overnight trading session gave us something we haven't seen consistently for a while, and that is a bit of green momentum. Specifically, ADA is up around 0.7% at the time of recording, and more importantly, we actually saw a rising trend overnight, which is a shift from the pattern we've been discussing for quite some time, where overnight sessions were consistently drifting lower. So this change, even though it's small, is something traders are paying attention to, because it could signal a potential short-term shift in sentiment. However, at the same time, the broader market still looks like a mixed bag, where some assets are slightly green while others are modestly red. And that tells us one very important thing, which is that the market right now is not moving with strong conviction in either direction, and instead is clearly waiting for a major catalyst or news event that could push prices decisively one way or the other. And one of the key reasons for this hesitation is the event expected to begin today around 10 o'clock, which could have a direct impact on global markets, including crypto. And as we've seen many times before, the anticipation of such events often creates this quiet, low-volume environment where traders prefer to stay cautious rather than take aggressive positions. And if we look at Bitcoin for context, it's currently hovering around the $70,000 level, which is roughly the same range it has been holding recently, while stock market futures are slightly down. And interestingly, crypto seems to have already absorbed some of the initial downside pressure earlier, which is why things feel unusually calm right now, especially when you consider that trading volume is sitting around $73 billion, which is relatively low for a weekday and particularly low for the start of a new trading week. So this tells us that market participants are essentially on standby, waiting to see what happens next. And one thing to keep in mind is that once the stock market opens, we could see a reaction spill over into crypto, but there may also be an earlier reaction depending on how this scheduled event unfolds, or even if it actually takes place as planned, because we've seen countless situations where events are delayed, postponed, or altered at the last minute, which adds another layer of uncertainty. And this uncertainty ties directly into broader geopolitical concerns, because there are still ongoing questions about potential escalation scenarios. And historically, whenever escalations have actually occurred, the market has reacted negatively. Whereas when expected escalations did not happen or were de-escalated, the market responded positively. And this is extremely important for crypto traders because it means that if the feared scenario does not materialize, or if it has already been priced into the market, then we could once again see a relief rally where prices start to move higher, something we've observed repeatedly in past market cycles where fear builds up, gets priced in, and then fades, leading to a recovery. And while this is not guaranteed, it is definitely a scenario you should be aware of as we move through today. Now, shifting slightly away from pure price action, there are also some macro indicators that are worth paying attention to, particularly in the energy sector, where we are seeing an unusual pattern with crude oil tankers. Specifically, large tankers over 150,000 tons are increasingly diverting away from the Middle East region and heading toward the United States. And there has been a noticeable increase in empty tankers making this move, which suggests that they are planning to load oil from the U.S. instead. And this kind of shift is not normal at these levels and indicates that something larger may be happening behind the scenes. whether it's strategic repositioning, supply chain adjustments, or reactions to geopolitical risks. And while this does not directly impact Cardano or crypto in the short term, it does contribute to the overall macro environment, which ultimately influences investor sentiment across all markets. So it's something to keep in mind as part of the bigger picture. And speaking of the broader crypto ecosystem, there was also a significant event involving Polkadot, where an exploit reportedly allowed an attacker to mint 1 billion DOT tokens and dump them in a single transaction for around $237,000. And while that dollar amount may not seem massive in the grand scheme of things, the real issue here is the security breach itself, because any exploit undermines trust in a network, and this is where the narrative around Cardano becomes particularly relevant, because Cardano has consistently positioned itself as a highly secure and reliable blockchain with strong fundamentals, including a robust proof-of-stake system, peer-reviewed development approach, and a track record of stability and uptime, and compared to networks that have experienced outages or exploits. Cardano continues to stand out in terms of resilience, which is why many long-term investors remain confident in its future despite short-term price fluctuations. And this ongoing contrast between secure and insecure networks helps reinforce Cardano's position in the market narrative. So, when you combine all of these factors, the current situation becomes much clearer, because on one hand, you have a market that is quiet and waiting for a catalyst. On the other hand, you have macro uncertainty and geopolitical risks influencing sentiment, and at the same time, you have individual blockchain developments shaping long-term confidence. And all of this creates an environment where short-term volatility is likely, but the bigger picture is still being formed. So the key question now is what happens next? Are we going to see a continuation of this cautious sideways movement, or will the market react strongly once new information comes in? Could this week turn into a sustained red trend? Or is this just another temporary shakeout before a move higher? And these are the exact questions traders and investors are trying to answer right now. So as always, it's important to stay patient, stay informed, and avoid making emotional decisions based on short-term noise, because the market often moves in ways that surprise the majority. So that's everything for today's update. Let me know your thoughts in the comments below. Do you think this week will bring more downside, or are we about to see a reversal and some green momentum return? And if you found this video helpful, don't forget to like the video and subscribe to the channel for more daily crypto updates and deep analysis. I'll see you in the next one.